We're jumping straight into Reddit today. Everyone is watching the price action, but the real story is the massive disconnect between the revenue explosion and the market's reaction.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the weeds of this volatility, and believe me, it is volatile, just do us a quick favor. Hit that subscribe button, hit the like. We're here simplifying the market for you every week, and you really don't want to miss what's coming next.
So let's set the scene a little, because if you haven't been glued to the screen, you might not get the sheer scale of what's happening. It's Friday, February 13th, 2026.
And if you're looking at your portfolio, you're probably scratching your head.
Yeah, you might be.
Scratching my head is, I think, an understatement. I feel like I'm watching a movie where the hero does everything right and, still gets knocked out in the first act. I'm looking at Reddit, and the stock has seen a 46% decline in a month.
46%.
That's a massive haircut. That's nearly half the value gone in just a few weeks.
It's brutal. And to be fair, it's not just Reddit. The whole sector is looking a bit wobbly. We're seeing a lot of rotation out of tech.
Sure.
But here's the kicker, and this is why we're digging in on this one today. They just reported their Q4 2025 earnings, and the numbers were, well, fundamentally, they were spectacular.
That's the part I just can't wrap my head around. I mean, usually when a stock drops like that, it's because they missed earnings or guidance was terrible or the product is on fire.
Right.
But here, they beat. They beat on everything.
They really did. And this creates that tension we love to analyze. You have a stock chart that looks like a falling knife. It's scaring everyone off. But then you have this earnings report that looks like a growth investor's dream.
So the big question is, which one is telling the truth? Is this a falling knife you shouldn't touch? Or is this one of those rare entry points that people will look back on in 6 months and just kick themselves for missing?
To figure that out, we have to start with the numbers. Let's look at the bull case first, because they are, frankly, eye-popping.
Yeah, let's do it. We're talking about a revenue explosion. Q4 2025 alone, Reddit pulled in $726 million.
And just to put that into context for you, that's a 70% surge year over year.
70%.
In this climate, for a company that's been around this long, that kind of growth it's just incredibly rare. Most platforms are fighting for single digits.
And the bulk of that, of course, is advertising. Ad revenue specifically grew 75% to $690 million. But, usually when we see companies grow that fast, they're just burning cash to do it right. They're losing money on every user.
That's the classic growth at all costs model. But Reddit isn't doing that anymore, and that's what makes this so interesting. It's not just the top line, it's the bottom line. Their earnings per share, their EPS, came in at $1.24.
And the street was expecting, what, 94 cents?
Exactly. That's a nearly 32% surprise, a huge beat. They didn't just hop over the bar, they launched themselves over it.
And it's not a fluke, is it? This isn't some one-time thing.
No, it's a pattern. They beat in Q3 and Q2 of 2025 as well. But what's really key here, and let's just simplify this, is the concept of operating leverage.
Okay, break that down for us.
So operating leverage is when your revenue grows way faster than your costs. I mean, think about it. Reddit has already built the platform. The servers are there. So when they add that extra 70% in ad revenue, they don't have to hire 70% more people.
Right. The costs are mostly fixed.
Exactly. So that extra money flows straight to the bottom line. That's how you get a net income of over $251 million, expanding margins while growing at 70%. That is the needle to thread.
That's the holy grail for a tech stock. Profitable growth. It means the business model actually works. But the money has to come from users. How are the engagement numbers looking?
Surprisingly strong. Daily active users up 19% to over 121 million.
Okay, wait. So 19% user growth is great, but revenue grew 70%. How does that math work? That implies they're making way more money from each person.
You nailed it. That's precisely the point. The metric that really jumped out was ARPU, average revenue per user.
It was up 42%, right, to almost $6.
Yes, $5.98.
Yeah.
And that tells us they aren't just getting more people in the door. They're getting much, much better at monetizing the people who are already there, squeezing more value from every single scroll.
Which gets us to the why. Why is this working? We all say about the moat, that competitive advantage. What is Reddit's moat? The interface hasn't really changed that much.
It comes down to network effects, but a very specific kind. See, platforms like Meta or Snap are built on your social graph people you know. Reddit is built on the interest graph. It's these authentic, super niche communities.
Like talking about, I don't know, mechanical keyboards or fixing a leaky dishwasher. I've spent hours there looking for answers I can't find on Google anymore.
Exactly. And that specific intent, that search for community or knowledge, is really sticky. It has high switching costs. I mean, if you leave, where else do you find 10,000 people obsessed with repairing vintage watches? You can't.
Okay, so the users are sticky. They've always been sticky. But the problem was that advertisers kind of hated it. It was hard to target. Brands were scared. So what changed?
This is the boring technical stuff that makes the billions. They overhauled their ad stack, things like the Reddit Pixel and PPI, the Conversions API.
Keep it simple. What do those do?
The Pixel is like a tiny digital scout. An advertiser puts it on their website. When someone clicks an ad on Reddit and buys a pair of shoes, that Pixel tells Reddit, hey, that ad actually worked.
But privacy changes have made that harder, right?
They have, and that's where SCPI comes in. It's a direct server-to-server connection that bypasses a lot of those privacy blockers. It lets Reddit prove to advertisers with hard data, if you spend $1 here, you make $2 back.
So they're not just selling eyeballs anymore. They're selling confirmed sales. They closed the loop.
That's it, and it's working. And management clearly believes it's working because they announced that huge $1 billion share repurchase program.
Now that's interesting. Isn't it a bit weird for a high-growth company to be buying back stock? Shouldn't they be plowing that billion into R&D or something?
It's a bit unusual, yeah, but it sends a very powerful signal. It says two things. One, they have the cash flow to do it, which validates the profitability. And two, they believe their own stock is undervalued. It's a massive vote of confidence from the inside.
They're basically saying the market is wrong, and they're putting their money where their mouth is.
Right. And it also helps offset dilution from employee stock programs, so it's a practical move, too.
Okay, so let's pause. We have huge growth, exploding profits, sticky users, better ad tech, and $1 billion buyback. Sounds like a total slam dunk. I'd assume the stock was soaring.
Does sound perfect, doesn't it?
But, and it's a giant but. The stock is down 46%. It dropped after these great earnings. So let's break that down. Why the faceplant? What is the market seeing that we're not?
And this is where we have to look at the flip side, the bear case. Because right now, the market is voting with fear.
Is this just buy the rumor, sell the news?
That's part of it for sure. The stock had a big run-up, but it's deeper than that. We're in a sort of consolidation phase. The stock is reacting to broader weakness in tech. When the big guys catch a cold, names like Reddit catch the flu.
The volatility has been insane.
It has, and that attracts day traders, which just adds to the downward pressure. But the real issue the bears point to isn't just moodiness, it's valuation.
It's still not cheap, is it?
Yeah.
Even after this drop.
No. Even now, the forward price-to-sales ratio is sitting around 8.3.
And the sector average is what?
Closer to 6.5. So you're paying a significant premium. And when you pay a premium, the market has zero tolerance for risk. You have to be perfect. If they smell a slowdown, they compress that multiple, and boom, the stock price drops.
So the designer house has to have perfect plumbing.
Exactly. And the competition, Meta and Snap, they aren't sleeping. They're fighting for those same ad dollars.
That's the big fear, right? If the economy slows, do advertisers stick with the experimental platform, which Reddit still kind of is, or do they retreat to the safety of Google and Meta?
Right. Advertisers usually cut the experimental stuff first. And we're seeing that caution from the big banks, too.
Yeah, I saw Goldman and JP Morgan both cut their price targets.
They did. Goldman to 206, JP Morgan to 200. But notice, those targets are still way higher than where the stock is trading now.
So they're saying it's worth more, but we're not screaming buy right now.
Basically. They're acknowledging the great quarter, but they're pricing in a potential slowdown, hedging their bets.
And there's this regulatory cloud out of Europe, the Czech Republic push. What's that about?
That's a big deal for all social media. There's a strong push in the EU for strict age verification and even bans for kids.
And Reddit's demographics skews young.
Precisely. If they introduce friction, like forcing you to upload an ID, that could really threaten that daily active user growth we were just talking about. It adds a layer of uncertainty.
So we have this tug of war. Financials say go. Market sentiment says stop. What should we be watching over the next, say, 30 to 90 days?
The next big catalyst is Q1 2026 earnings. That'll be late April.
And what are the targets they need to hit?
The street's looking for about $614 million in revenue. That's 56% growth. And an EPS of 60 cents.
Wait, 56% growth. That's a slowdown from the 70% we just saw.
It is, and that's the danger zone. The narrative is all about can they beat again? If they beat again, the bears lose their argument. But if they only hit, say, 45%, the stock could fall further.
And beyond the numbers, what about product updates?
Keep a close eye on Max campaigns. It's in beta right now.
What is that, really?
It's basically the easy button for advertisers. It uses AI to automate everything. It's Reddit's version of what Google and Meta already have. If that rolls out and works, it could be a huge catalyst for small business ad spend.
Right, because small businesses just want to put in a credit card and get customers.
Exactly. Also, watch the buyback. If we see filings that they're actually buying shares aggressively at these prices, that will put a floor under the stock.
And the macro environment, of course.
Always. The digital ad trends, sector rotation. If tech comes back into favor, Reddit could lead the charge because it's so volatile. It moves fast both ways.
And that's speculative long-term goal.
Yes. The $3.8 billion in revenue by 2028, that's the blue sky scenario. If they hit that, we're talking about massive growth from here.
Okay, so let's wrap this up. Let's give our listeners the lowdown.
Here it is. You have a company growing revenue at 70%, it's profitable, and it has $1 billion to buy its own stock. And yet it's down 46% in a month.
The bull view from folks like Oppenheimer who see it hitting 250 is that this is a total mismatch. The business is on fire, but the stock is in the freezer. It's a buying opportunity created by market panic.
And the bear view is that the valuation was just too high, the sector is weak, and competition is fierce. The market is forcing a prove-it moment. They need to see if Reddit can sustain this momentum.
It is a fascinating setup. And here's a final provocative thought for you to chew on. When a company posts a 31% earnings surprise, beating every metric, and the stock drops like a rock, is the market broken? Or does the market know something that the algorithm doesn't?
Is price truth, or is it just noise? That's the question.
And that is the lowdown for this week. As always, thank you for listening to the Easy Money Show. If this helped you make sense of the chaos, make sure you are subscribed. We'll see you next time.
Stay curious, everyone.